Everyone, welcome to Medicine Heights and Livonia IBD meetup for October 2022. I'm going to make the presentation on the market internals, SPX levels to watch, and a special attention to the natural gas ETF boil. First, let me take you through the market internals. Here are the internals collected up until end of day today, which is Tuesday, 18th, October 18th. So if you look at, I'm mostly focusing on the 52-week high low. This is an NYSE and this side is Nasdaq. I'm mostly focusing on the 52-week highs and lows. Um, since our last IBD meetup, the market was just took only one-way direction, which is on the down, and you can see that these 52-week lows and highs, it's keep going down, and the 52-week lows are keep going up. On 9:30, we breached that 3600 low on the SPX. And you can see that from this was a low made on 9:30 with 52-week high as 5, which is the lowest reading, and the 52-week week low as 485. But since then, market was hanging in there for some of the time, and when we hit October, especially last week, um, we breached that 3600 level, and it was a fresh below the 3500. We hit 3500, which is one of the important or support levels we mentioned in the last IBD meetup. But since then, in the last 3 or 4 days, it miraculously market recovered on that day, on the Thursday on 10/13, recovered and we closed at the high. And if you look at the volume was extremely good on the day, and the advancing volume and declining volume, which is 4 to 1 in terms of the positive versus the down value. Then we on Friday, it was a little bit disappointing day, though it is not a disaster, but just a disappointing day. It market gave back 50% of it. But since then, you can just look at the volume, advancing volume versus the down volume. It's 4 to 1, which is one of the greatest reading of a long time. Advancing volume is higher, so that means more buying is happening, buying pressure is happening, and which followed up by today, which is Tuesday. At the end of the day, we can see that advancing volume is 3 to 1, almost 2.5 to 1 on the NYSE. Even on the Nasdaq side, which is 2 to 1. So this means there is a lot of buy volume is coming up. This could be a rally which everybody is expecting. Being 3500 is an important level. We went ahead and we tested that low and we bounced up. So let's go to the chart to look at how that chart is looking. So here is the SPX chart, and we went on last Thursday after the CPI report. We went right to the 3500 level, which is nothing but 50% of the COVID. If we bought at the COVID low, this is a 50% pullback from the COVID. That means 50% of the entire move from the COVID low has been retraced. Important low. So from here on, the market bounced, and the last 2-3 days, it's putting up some decent show. It's not a negative. It's a positive show in the last 2 to 3 days. So looking at this chart, every pointer is where are we heading next. So in order to say where are we heading, we just look at the first RSI. So there is a divergence on the RSI. Compare this low versus this low. You can see that there is a divergence. You can see that RSI, there is a divergence. So that's the divergence is pointing to the upside, and also the volume we looked at from the previous Excel, the buy side volume is coming up. So putting all these things together, the least path, or at least for now, we are marching towards the higher side. We also breached the 20-day moving average, and we are moving towards the higher side. And so then, where are the potential targets? So 3,800. Right now we are at 3,700 on the SPX. 3,800 is a decent level of resistance. Why? It is a previous area where it was not able to breach above. So this is the resistance, and we still a resistance. So we expect 3,800 would be a strong resistance. Also, it's a downtrend trend line. So this trend line is right at the 3,800 level. So we can expect that 3,800 level would be a good resistance in the near term. But the looking at the RSI divergence and the retracements and everything else, my personal view is that we may retrace a little bit here and go back and breach this level. And if we breach, then the next target would be the 3,900. So that's another level to watch. This 3,900 would be a big resistance. The reason being, we have a resistance here. We broke through that. Sorry, we have support here, broke through that, and now that support becomes a resistance. So this area, the 3,900, also coincides with 50% of retracement from this 4,300 high, which was made in August 15, which is a 50% retracement. Also, you can look at the green line, which is the 50-day moving average. So all of the resistance are at 3,900. So I would expect that 3,900 would be a significant resistance. So from here on, it's anybody's game whether it's going to go up or it's going down. That's we got to see how we are approaching this level. But for now, it is appearing that we may test this 3,800 in the coming days, and we have tech earnings coming up in the next week or so. So if the earnings are good, then we can break here. Possibly, we can break up too, but it all depends on the earnings for the next 2 to 3 weeks. So at this point of a time, the negativity is slightly turned into a positivity. The reason being the volume is coming up on the buy side, and also we are bouncing from the 50%, which is an important Fibonacci range or Fibonacci retracement level, and also taking into account the seasonality of October, November being a very bullish month for stock. So considering all the data points, it may be possible that we may be going higher from here on, but with the caveat that we don't want to see this level. What is this level? This is last Friday's low, which also that 30, um, give or take 3,600 level. We don't want to go below the 3,600 level. Just in case if we breach it, then we may go back to the 3,200 level in the near term. But as long as this 3,600 is intact, we are looking for 3,900. Then from there we have to take it one day at a time. So similarly, if I go to the NDX, NDX is again in the same boat as SPX, but NDX is a lot weaker. The reason being NDX retraced 61% of the COVID move, whereas SPX retraced 50%, but NDX retraced 61%. And here also I would say the same thing, but slightly that the downtrend line we already tested and we backed up from that. If we move here one more time, we may breach here. So look at the NDX for the direction, because we are already tested this downtrend line. If NDX breaks above this line, then possibility that SPX might also break this same downtrend line and moving towards that 50-day SMA, simple moving average. Okay, so that's on the NDX side. Similarly, going to a Russell. Out of all the three indexes, Russell is the strongest by just looking at the chart. The reason being, you can see that this was the June. Here's the June low, and we tested that low. Look at the last Thursday's bar. We just went slightly lower and came back inside. That's a great sign of the strength. So right now we were testing the previous pullback high, which was at the 1780 level. We tested and we backed off. Next time when we move here, we would expect it should break, moving higher. So, and the 50-day moving average might be a slight area of resistance, and the next target would be 1900 on the Russell side. So these are all the indexes, and Russell being the strongest, NDX and SPX is just hanging in there out of all the three. So these are all the patterns for the three indexes. And I have noted down on the SPX side the important levels to watch. That level being, here are the levels on the SPX. We are at 1018. We currently 3720 is the level we are. Here are the resistance levels: 3800, 3900, and 4100, and then 3400. Sorry, I think this is wrong. The R4 is wrong. So these three are the important overhead resistance. On the support side, 3500, which was a low made on last Thursday. 3200, which is a swing low and very, very important low from my perspective. And then 2750. These are all the important levels on the SPX side. So going back to the other chart which I wanted to show, which we also looked at in the last month. Last month, I was talking about a head and shoulder pattern on the boil, which is the natural gas WTF. We were somewhere here. Okay, we were here on boil last month when we had the presentation. So I was pointing to you on this head and shoulder pattern. Whenever this pattern forms in and we breaks the shoulder, then there will be a huge move on the downside. That was looking at the previous head and shoulder pattern on the same boil. If you break out this neckline, you will go down a lot. So that happened on boil. That's a great technical pattern. It broke this neckline, which is around the 70, and look where we are. We are at 40. This is on the boil, which is the natural gas ETF, double ETF for natural gas. So I would think it is going to test the previous low, and also possibility that it may be going back to 35. Boil kind of a stock, we need to pick at the right time. If we pick at the right and right entry, then it easily can go 20%, 25% easily. But right now is not the time. We may need to wait until it tests 35. Then we need to see how it is reacting at this level. But the other aspect, if anybody is looking at boil, looking at the natural gas, which is driving the boil value, would be a great way of finding out what would be the entry point. So if I look at the natural gas, currently we are here. So look at this pattern. This is the head and head. This is head, shoulder, the other shoulder. We broke through it and we came right here. There is a lot of congestion here in this area. You can see that this area there is a lot of congestion. So it broke through the congestion. So what typically happens is market might retrace or go back and test here. When it tests here, um, this is not going to break because there is a huge volume here at this level, and the anticipation is that it may go back down. So this is a level, it may go back. So if somebody want to wait, if somebody want to get into boil ETF, then wait until a test of this level, which is 5.3. We want to see a test here, break little bit, then go back inside. That is the level to buy. We want to test this level, test here. Once it tested, and then go back into this 5.4 level. That's a time to buy. That's a great technical pattern. You might have seen this on Russell. I'm pointing you here. So this is the area, lot of congestion in this area. It broke the congestion, went down, immediately rejected and come back inside. So when it rejected and come back inside, that is the place to buy, with the minimum target being the previous resistance. So in terms of Russell, which is 1560 to 1760, like 100.4. Similarly, on the natural gas, if it break below this 5.3 and come back inside, then the ideal target would be 6.2, which will be equivalent on the boil side, easily be a 20% move, 20%. So we will talk about, we are looking at around 34. If it breaks 34, come back inside, the first target would be 46. From 34 to 46, which is about almost 25 plus percentage. Minimum target of 46, then ultimately 58 and to 70. Those are all the technical patterns that might happen on this kind of a pattern. We want to see breakdown and then immediately come back inside into the consolidation. That would be the time to make an entry, with risk being, or stop being, the low of that move, which would be a great entry point for a stock like this. Not only Boyle, any stock which is exhibiting this kind of a pattern, that is an entry point we can definitely take. But observe the patterns on individual stocks, how it happened during the uh, consolidation, and then when we breaks through the consolidation, come back inside, what was the pattern it was exhibiting. Before you can look at those kind of patterns before you can confidently go buy something. Okay, so this is what the analysis which I wanted to present for this month. Hope this was helping, and stay safe. Thank you so much for watching.